it's the closest thing to 2008 that we're going to see, I think, in the next decade or so.
When you're doing all these deals, insurance, are you using the same insurance company, or you have a certain insurance company that you deal with?
That's a great question. So what more than likely will happen is and I'm trying to answer it because it's levels, obviously, right? So I'm trying to answer the question more relevant to, but here's what I would say. You would likely start out with the same company, okay? But then you're gonna get to a point where you'll end up with the same broker, but you will be insured through different companies. That's kind of where I'm at right now. I'm with the same broker, but I got different insurances on various properties because it's based off of it's based off the asset now. You know what I mean? I acquired different types of assets. And so we got different strategies based off of all that. It's all asset protection. It get more convoluted, but to your advantage, you know what I mean, as you scale. But initially you probably will use the same company. And so what's going to be important is, depending on what your exit strategy is going to have a lot to do with the type of insurance that you're going to go get. Okay, so for instance, if you're flipping a property, there's only a select few of national insurance companies that like to insure vacant properties that's being renovated. Small segment of them, okay, without you paying an arm and a leg and giving up a child in the process. You know what I'm saying? And then, I mean, I'm just telling you what is crazy out there, right? But then on cash flow, it's a little more of a conservative approach. And so it widens the pool a little bit. But I just read something, I think it was yesterday, where they're saying that over the next year, it's going to be double digit. I think it's 31 states that approve double digit percentage increases in the cost of insurance. 31 states have already signed off. Right, Florida being one of them. Just so you know, I know you and Umatilla over there. You know what I'm saying? So
yes, the best city in Lake County, by the way. But anyways, what are you using in Florida for insurance? Are you using the same broker, or you just kind of letting him find you some insurance here in Florida? Or
so it will be different. Some brokers are nationwide, but mine isn't. So he's licensed in Michigan and Georgia currently. Okay. So I'm not holding any assets in Florida right now. But when I was doing stuff in Florida, I was doing flips, and I was using NREI Guard, National REI Guard, NREIGUARD. And they got a nationwide footprint. I haven't used them in years. I know some of our students still do. So, but to answer your question, you will likely start out with the same insurance company, and then it will start to kind of sprout out a little bit as you start to grow your portfolio, because it's going to be different strategies based on different properties.
I do want to talk about the state of commercial real estate, because I know, of course, like 2007, 2008, it was residential properties, but now it's commercial, that's getting kind of hemmed up. Everybody's want to stay at home. Companies are not seeing the value in having a brick and mortar. They can do remote and everything else. So the advantages of having commercial properties, also being able to, I know you can do a BRRRR, with a commercial property and everything else, but the pros and cons of what you see going forward, and into the future with the commercial real estate. Because I mean, I even see a whole lot of places that are, about to go under. When you look at the landscape, I mean, places like Kohl's and things like that, e-commerce, you got a lot of people, a lot of places that they're about to go under. Technology kills. So there's going to be a lot of commercial real estate out there too, that we can, may be able to get zoned, to put rentals in.
Yeah, no, a great concern. or great insight, foresight. Yeah, I mean, it ain't no secret. It's $1.3 trillion of bad debt coming due over the next 24 months in the commercial space as a whole. Probably 600-700 billion of that is multifamily. The rest of it is office, retail, warehouse. A lot of opportunity for sure. A lot of.
I'm just starting.
Oh, that was your. I got you.
Yeah, I'm sorry about that.
No. You good, bro. I didn't know where it came from. You good. So it's gonna be a lot of opportunity. There is already a lot of opportunity. I mean, I just even look at my market. There's more deals available now than there has been in 4 or 5 years, right? And I think there's a lot of creativity. I'm looking at a lot of owner operators who have commercial office space that, because to your point, a lot of people just didn't return, and that footprint is just dwindling away to where they're converting those now into apartments. I mean, they're turning them into lofts and condos and apartments, so they're changing the use of those places. And I think that's going to become a common theme. I think there's going to be more multifamily investors who are going to look at these office buildings as, dwellings that they can take and rezone for residential commercial use. And so I think that we're going to see more and more of that because the acquisition costs can become so low that it justifies doing that versus a new build. Okay. And so, yeah, to your point, it's Armageddon. It make no mistake about it. I think because commercial is less popular, it's not as talked about. But for sure, it's the closest thing to 2008 we'll see in real estate. We won't see that on the residential side. They've been talking that for years, but we're gonna have a correction, but it won't be that, right? What's happening on the commercial side is very close to what happened in 2008 to 10, particularly because there was a lot of notes, there was a lot of bad debt that was written during that time with compressed cap rates. Cap rates are starting to open up a little bit now, so values are coming down. And so what's happening is the properties aren't worth what they were when they bought them, and so they can't refinance the debt. So now they're having to get out of them. You know what I mean? In many cases, pennies on the dollar. And so, but we should be encouraged by that, though. That's a great thing for us, not a bad thing, right? Because there's just going to be a lot of opportunities out there for the cheap. There's going to be a lot where we're going to see a lot more like seller finance opportunities is going to be on the commercial side for sure, right? We're going to see it residential as long as rates stay up. We're going to see it on the commercial side because a lot of owners are going to try to get creative so that they don't have to take a complete L just by selling it for pennies on the dollar. So they're going to try to salvage what they can by staying connected to the deal in some degree to try to ride it out, so it's gonna be a lot of creativity. There already is. And I agree with you. It's the closest thing to 2008 that we're going to see, I think, in the next decade or so.